Bitcoin has been outperforming most of the longer tail assets within crypto. As we were moving towards the election, it was becoming so clear that crypto is a bipartisan issue, especially young people. And we know from the research team at the SEC and others that there was much more support for crypto inside the SEC. Certainly Bitcoin, but crypto a little bit more broadly, just more of an open mind, I would say, than many people appreciate. So
Cathie Wood starts out by highlighting how well Bitcoin has performed in comparison to other cryptocurrencies, especially as the United States approaches the critical 2024 elections. She draws attention to the fact that cryptocurrency has become a significant political topic that appeals especially to younger voters. The revolutionary potential of digital assets is now being recognized more and more by both major political parties. Wood also draws attention to President Donald Trump's recent clarifications on his supportive stance towards crypto, a shift that could pave the way for greater regulatory focus aimed at legitimizing digital currencies. Furthermore, she talks about the SEC's recent modifications. Wood thinks that though SEC Chairman Gary Gensler has taken a cautious approach to cryptocurrency, his influence may soon shift in favor of a more crypto-friendly approach. Before we dive deeper, please take a moment to like this video, subscribe to the channel, and turn on post notifications for updates on all things finance and cryptocurrency. We'd love to hear your thoughts in the comments section. Thanks for tuning in and enjoy the video.
Bitcoin has been outperforming most of the longer tail assets within crypto. As we were moving towards the election, it was becoming so clear that crypto is a bipartisan issue, especially young people. And so both parties were catering to it, but I think that Trump made clear what he thought. And I think we're going to see a lot of legislative moves that will legitimize crypto in the eyes of people who are just going to stay away from it until we had our regulatory act together. So from a regulatory point of view, I think Gary Gensler will be out of business. And we know from the research team at the SEC and others that there was much more support for crypto inside the SEC. Certainly Bitcoin, but crypto a little bit more broadly, just more of an open mind, I would say, than many people appreciate. So, and then on the legislative side with Senator Lummis and Senator Gillibrand, I think we're going to see legislation that is going to be very crypto friendly because the U.S. wants to lead in these three revolutions: the money revolution, which is primarily Bitcoin, global rules-based monetary system, the DeFi, the financial services revolution, DeFi, decentralized finance, or I'm hearing it called the Finternet. I learned that from an Indian person in India. They're calling it the Finternet, which, think about it, that actually rings true. This is, the layer of the internet that no one built in, the developers did not build in, because we didn't know about financial services and commerce in the early 80s being a thing online. It just didn't occur to anyone. And then the third revolution is Web3, or, the digital property rights revolution. And that's going to be huge. And so I think this administration is going to be very friendly. After all, Trump loves the idea, and Melania as well, of these crypto assets, or Web3 assets with his face on them. And so I think it's going to be fun. I think, the U.S. really spawned the internet revolution, and I think we'll carry on now. President Trump says he wants interest rates down, and I think he's thinking especially about mortgages, because housing affordability has just crashed in this cycle. If we're right and the economy starts growing at an accelerated rate, which is what the long bond yield, if you look at the breakdown between inflation and real yields in the long bond. You can use tips to do that. More of the move recently has come from real rates. Some has come from inflation. Now, one of the mistakes I think people make is something called the Phillips curve. They assume that when employment is strong or the unemployment rate goes down, that inflation goes up. And if you look at the 80s and 90s, and I think we're going into that kind of environment again, you'll see that as real growth accelerated, inflation came down. Why? Productivity. You get good unit growth, you get the productivity coming down. Now, the reason people don't think we'll see a repeat of the 80s and 90s is we started at a 15% inflation back then. And here we're at 2.5% inflation, roughly, depending on the measure. And they're saying, well, what does that mean, productivity and inflation coming down? I think some pricing's going to actually go negative because technology is inherently deflationary, but this is good deflation. Your consumer electronics product prices come down over time, or they increase the quality. So I think we're going to see a lot more of that. And I think that's going to be one of the biggest surprises. Much lower than expected inflation. Interest rates, as a result, lower than expected, even in a rapid growth environment. And I can just sum it up by saying this. We have lived in roughly a 5% nominal GDP environment, say 2% real and 3% inflation. Can you imagine, if we're right, an economy where maybe we're growing 4% real and inflation is 1%. It's still the same nominal, but we think that could happen. And part of that could happen because because technology's permeating every sector, blurring the lines between and among sectors, this deflationary influence. AI training costs dropping 75% a year. AI inference costs dropping 85, 90% per year. That's going to permeate every sector. So I think this is going to be a golden moment for equities. I think it's going to be better than the 80s and 90s.
According to Cathie Wood, adopting cutting-edge technologies, especially artificial intelligence AI, might significantly increase the U.S. economy. AI has the potential to boost economic development while controlling inflation, which would boost the dollar and benefit the economy as a whole. She stresses that removing regulatory barriers, especially in tech-related industries, is crucial. By easing these restrictions, the U.S. could maintain a competitive edge globally, benefiting from faster innovation and reduced bureaucratic hurdles. This deregulation, Wood argues, is key to fostering long-term, sustainable economic growth. Wood also emphasizes how technological developments and widespread AI use could improve capital investment returns. She believes that as AI transforms many industries, the American economy will become more productive and efficient. Innovations in fields like data processing and AI training have the potential to drastically reduce costs, increasing productivity and promoting overall economic efficiency. Before we dive back into Cathie's insights, please take a moment to like this video, subscribe for more finance and cryptocurrency content, and now let's hear her following words.
What's going to drive the dollar? Returns on invested capital here, U.S., relative to the rest of the world. The policies, tax cuts, deregulation, keeping inflation down, and we can get into that in a moment. All of these are dollar friendly because returns on invested capital here in the United States, all other things equal, will go up relative to returns in the rest of the world. This is what happened during the Reagan administration. In fact, it was so extreme in the Reagan administration that it caused major problems in the rest of the world. Especially, they had inflation. We enjoyed lower inflation with the dollar going up, especially commodities are priced in dollars. So commodity prices to us went down. Commodity prices to other countries went up. And it was a very difficult time, so much so that In 1985, I believe it was, there was the Plaza and there were two accords, the Plaza and the Louvre Accords, both of which encouraged Treasury leaders from around the world to come together and agree to get the dollar down, including ours. What did that mean? It meant that we had to ease more. We had to ease, all other things equal. That's also very positive. So I think the thing that's going to keep inflation down even more, and this will be true in every country to the extent they adopt these new technologies, especially AI, is the massive productivity gain we're going to see. It's going to drive higher growth and lower inflation. And I think the U.S. being freed up, especially from regulation, which has been strangling us, is going to be a huge beneficiary relative to what otherwise would have been the case. That's also dollar positive.
Cathie Wood explained that the U.S. economy has the potential to experience higher returns on invested capital compared to the rest of the world, thanks to strategic policies. She pointed out that tax cuts, deregulation, and measures to keep inflation in check all contribute positively to the strength of the U.S. dollar. Wood drew a parallel to the Reagan administration, during which similar economic policies led to a significant rise in the dollar's value. This strengthened the U.S. economy but created challenges for other countries, especially in managing inflation. Because global commodities are priced in dollars, the strong dollar lowered commodity prices domestically while increasing them internationally, creating economic stress worldwide. Wood believes that adopting new technologies, especially AI, will be key to keeping inflation low and driving economic growth. The productivity gains from AI are expected to lead to higher efficiency, boosting economic performance while keeping inflation down. As we wrap up, Cathie Wood's insights reveal a promising future where strategic policies and cutting-edge technologies could elevate the U.S. economy to new heights. The potential for higher growth, lower inflation, and a stronger dollar seems achievable if the right measures are embraced, particularly tax reforms, deregulation, and widespread AI adoption. What are your thoughts on this vision of economic transformation? If you enjoyed this video, don't forget to like, subscribe, and turn on post notifications to stay updated with the latest in finance, crypto, and tech innovation. Feel free to share your insights and comments below. We'd love to hear how you think these economic strategies might shape the future. Thanks for watching and see you in the next video.